This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 23rd, 2012. Our time is 8:44 Mountain, 10:44 Eastern. Our radio show runs on QR 77 in Calgary, 630 CHED in Edmonton, and AM 640 in Toronto. If you ever miss a radio show, the shows are archived on two different websites. Harold's website, rarecoloreddiamonds.com, also HESradio.com, and we have a podcast, which is free to you through iTunes. Get iTunes on your computer, your smartphone, and listen to us anywhere you go. The radio show is portable, and we will go with you. This week, it was the U.S. Thanksgiving yesterday, Black Friday today. Happy Thanksgiving to all those that listen to our radio show via the internet in the United States. We know there are quite a few. Bigger news for us here in Canada. It's the Grey Cup, the 100th anniversary of the Grey Cup in Toronto. Toronto in the game against Calgary. So good luck to the Calgary Stampeders. Good luck to the Toronto Argonauts. 100th Grey Cup. And we wish them a lot of luck. Our radio show is in both cities, so we can't choose. We have to be neutral. Also this week, we had the ceasefire between Hamas and Israel. We'll have to wait and see how long that holds. Also, the fiscal cliff, that has not been dealt with in the United States. A lot of people believing now, Harold, that they're going to kick the can down the road. They'll say, well, we'll make some adjustments here or there, but we'll deal with it in 5 years' time. And they keep kicking the can down the road farther and farther. They never really deal with the problems. And as a result, you're going to see a very weak economy for a long, long time. And eventually, it may get to a point where it's not just a fiscal cliff, it's a massive drop-off due to the fact they're not dealing with the serious problems the United States has.
Well, that's not a shocker, Randy, because that's the way that things seem to be going. They do the same with the budget for the White House and all that. So there's just no doubt that situation, they could turn it into a positive if they only did the right thing. If they do the right thing, it'll be a very positive thing for the somewhat for the economy, but mostly for the stock market. But as you said, they're going to kick the can down the road and delay everything, just as they're doing with almost every other situation. It is American Thanksgiving. I'm in Las Vegas for the weekend visiting my mother-in-law and sister-in-law, but we're doing the show from Las Vegas here on Friday. And the gold market, because this is really a very thinly traded market, no traders are around at this point, but I got to tell you, the gold's up $18 today. Gold's up to $17.50. Silver is up 43 cents. We broke $34. Platinum's up $21, is trading at $1,611. And then you've got palladium up $8, trading at $672. So you've got a situation right now that even in a thin market, we're over the seasonal market in gold and silver that we saw the sell-offs during the month of October and into the first 2 weeks of November. But now the market seems to be straightening out. And again, we've got a big day today. Even though the market is thinly traded, you would have thought that the market would have sold off based on the fact that there's a ceasefire in Israel right now. However, gold's up $17.50, silver's up 43 cents, and oil is trading up $1.03 right now. So we're back up to 88.41 in crude oil, which I'm very, very bullish on. I think oil is going to move substantially higher also. A lot of this move is due to the U.S. dollar falling. The U.S. dollar, which was strong over the last week or so, is now starting to sell off. It's down 31 points, and we're trading right now at the 80.40 level in the U.S. dollar. In fact, the Canadian dollar is stronger than the U.S. dollar at this particular point. As the U.S. dollar continues to fall, gold and silver prices will continue to skyrocket. And the fact is that the only thing that is holding up the U.S. dollar at this point is the weakness of the euro. And I've got to tell you, the situation in Europe is getting worse and worse and worse. It is certainly not getting any better. In fact, if you go on YouTube or if you go on Yahoo and you look at the world news, last week, the rioting that went on in Italy and Spain and Portugal and Greece and all those areas was absolutely frightening. You're talking hundreds and hundreds of thousands of people meeting in the streets and are concerned because the taxes are so high in those areas right now. The fact is that people just can't live. They've got 25% unemployment. They've got over 50% unemployment amongst young people coming out of college, those are depression-style numbers. And the fact is that the same scenario could happen in the United States. In fact, it's predicted that it will. Because when you take everything away from people and they've got nothing else left to lose except to fight for it, that's what's happening in Europe, and that's what's going to happen here in the United States. Maybe not to the extent of what's happening in Europe, because in a large extent, the government here in the United States, they take care of the 45% of the people that can't seem to support themselves at this particular time, which is one of the major reasons why President Obama got reelected. So the fact is that things in the United States are going to change dramatically. We know by listening to the Federal Reserve and by Timothy Geithner that there is going to be massive, massive printing. That's the only way that the central bankers and the Federal Reserve sees keeping this economy somewhat afloat. But we know, just by sitting back, that when you print the type of money that they're printing in Europe and here in the United States, the fact is that there's only one conclusion that's going to come from them, which is massive inflation. So the fact is that we just sit back and we let everybody play their cards, but there's absolutely no doubt what the result is going to be. It's going to be extremely high inflation, and there are very few assets that do well during times of high inflation. Not only are we going to see financial inflation because of a weak dollar and that type of scenario, you're also going to see food and oil inflation. In actual fact, one of the worst droughts ever to hit the United States is really going to take effect next year. So basically, you're going to see the price of food skyrocket. You're also going to see the price of oil skyrocket. So give that with a weak currency market, and there's only one scenario that makes any sense whatsoever, and that's inflation. And I know that what the Federal Reserve and the governments are thinking is that we need to get the economy moving at this particular point. So let's go ahead and continue what we're doing by printing and trying to put money back into the economy so things will pick up somewhat, and then we'll deal with inflation down the road. One of the major reasons that we bought gold and silver back 11 years ago, when gold was at $250 and silver was below $4, was exactly what we felt was going to happen, which is happening right now. So we've seen a huge increase in our investment. Those that bought physical gold back 10, 11 years ago, and I know there's a lot of our clients that own gold and silver from 10, 11 years ago when we first started this radio show. Just think about an investment that has gone from $250 all the way up to $1,900. We're trading right now at $1,750, but that's a gigantic increase in the price of gold. Silver's gone from $4 to $50, pulled back to 26. It's been more volatile, but now we're back up to $34 silver. This is all to do with inflation and currency devaluation, which is coming forward. So there's no doubt what we need to do. We need to be in the physical gold and silver market, and you need to own hard assets. Diamonds we'll talk about in the second half of the show, but they're doing amazing also. Gold, silver, diamonds, oil is where our money should be put, and we should be doing it in a very conservative level. We're not speculators here. We're not big risk takers. Those that are taking big risks at this particular point are only going to lose their money. So we're just sitting back and letting our investments move up, and that's exactly what they're doing. Now, we're up $1,750 in gold on Friday as we're taping the show. If we get above $1,800, which I think we will very soon, we're only $50 away, we could see that in a day or two. We get above $1,800, that's a major breakout level for gold. But the biggest breakout level is the all-time high in gold, which is at $1,900. I believe we have a very good chance of still breaking that this year. The fact is that we made some pretty bold predictions at the beginning of the year, and again, where some of them are not coming true at this particular point, we still have a month and a half left to see what happens. And gold and silver and oil can make massive moves in a very short period of time. And even if we don't hit our actual goals this year, because it was a strange year with it being an election year, the fact is that I still believe we're going to be in amazing shape going into next year. So again, I'm a big buyer of gold and silver, especially silver at this price. It's tremendously undervalued, and I think that we're still going to get a very, very strong rally going into the latter part of the year. Again, we had gold down just last week to right around $1,700, and we're up $50 from that point. Silver's moved up about $1. So very enthused about what's happening in the hard asset market. The big situation, though, is inflation, and there is absolutely no doubt that that's the area that we're heading. And that's not only us saying that. Some of the most brilliant minds in the world, economists, are saying the exact same thing, because in all honesty, these are action-reaction markets. When you do one thing, something else is going to happen as a result of it. And when you raise, or when you do what the Federal Reserve is doing, which is reducing the value of the dollar as substantially as they are in printing, like with QE3 and soon to be QE into infinity, there's just no doubt what the end result is going to be. So again, we just sit back and we bide our time. We don't get anxious. We don't do anything stupid. We don't do anything crazy as far as heavily leveraging positions or anything like that. We own our physical gold and silver and diamond, and we just sit back and let the markets come to us. And that's exactly what the markets are going to do, because once we break $1,800 and then $1,900 gold, the next move is $2,000, $2,200, and then $2,500. And the prediction for long-term gold is in the multi-thousands of dollars. And for silver, it could easily be $100, $150, or $200 metal. Again, you're talking another potential 600% in the gold market. The diamond market is on fire. We're going to talk about that also. But get the newsletter this week. Even though it was a short week, and again with the Canadian American Thanksgiving, is loaded with very strong information. And one other thing that you want to pay attention to, you want to pay attention to where the smart money goes. Guys like George Soros, as an example, this guy is a leader as far as markets go. He's one of the best market traders I've ever seen, that the markets have ever seen. He is the guy responsible for bringing down the Bank of England when he shorted the British pound and made over $1 billion in one day. He's now back into the gold market heavily, as is China, as is India. And the thing that I'm thinking is that there's not enough gold for all these countries that are buying at this particular point. So my feeling is we're in a very bullish market. I'm very excited about what next year is going to bring. And again, we're just going to sit back and let the markets come to us. That's what we're doing at this particular time.
And I think one thing people need to understand, and that is we are in a long-term secular bull market. People have said, well, this will be the 12th year that gold has had a positive return. That is not a surprise when you are in a long-term secular bull market. These things can go for 20 years, as we have seen in the past with other markets. How do you invest in precious metals? You speak with Worldwide Precious Metals, the company that Harold recommends you use, a Canadian company out of Vancouver. They've been in business over 10 years. They have 10th anniversary incentives. Speak to them. Connect with them. Their phone number, 1-866-623-2002, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com, 1-866-623-2002. Let them educate you about investing in hard assets, gold, silver, platinum, palladium. Start your own precious metals investment account today and get our newsletter. There is a story in our newsletter that is a must-read. We had it last week. We didn't get to it because we had some other pressing material we wanted to get to more. But this is a must-read story on silver. I put it back in the newsletter. It's rare that I do that, but it's so important for you to read. Silver price to increase 400% in 3 years. The silver bull run will continue, says investment specialist Ian Williams of Charteris Treasury. Silver is about to enter a sustained bull market that will take the price from the current level of around $34 to $165 an ounce, and we expect this price to be hit at the end of October of 2015, he predicts. So here we are. We've got about 2 years and a little bit to achieve that goal. This forecast is based entirely using technical and cyclical analysis and is in keeping with the mathematical form displayed so far in the bull run that has taken silver from $8 an ounce in 2008 to its current price of $34 an ounce, having hit $50 an ounce in 2011. Mr. Williams says the silver price was more volatile than gold, but he expects silver to continue to dramatically outperform gold. The Charteris manager says the macro fundamentals were supportive for the silver price, such as the re-election of U.S. President Obama, who supports Ben Bernanke's policy of quantitative easing. So there you have it, a very bold prediction from where we are today, around $34, $35 to $165 by 2015, October of 2015. Also coming out, silver prices may climb as much as 38% in 2013, according to GFMS. and they're the people that are affiliated with Thomson Reuters. Philip Clapwick said silver prices may rise 38% next year from current levels as weak global economies spur safe haven demand for the metal. And obviously we could see money printing as well. Greg Hunter, former CNN reporter, he interviewed Chris Duane, and he believes the system will collapse. It must collapse based on what's happening. He thinks that the gold-to-silver ratio of 52-1 right now is very attractive for silver. He also goes on to say that he believes we could see a 1-to-1 silver-to-gold ratio, especially with what's happening in the marketplace, and he believes there has been some manipulation. He goes on to say that silver pushing past $50 an ounce is definitely something we could see in the future. Also, Ron Rosen, and you can read this in our newsletter and see the chart. He has a roadmap for gold at 3,000, silver 100 plus, and he says that we could see $100 to $115 in silver by February of 2014. So definitely get our material this week in the newsletter. You can read all the articles, 1-866-623-2002, the website, wwpmc.com. Harold, even if somebody like Ian Williams is partially right, let's say we get to $80 or $100, we will still have a massive move from where we are today, around $34, $35.
Oh, you better believe it. I mean, a move to 100 is almost 300%. Is almost 300%. There's very, very few investments that return anything nowadays, let alone, what gold, silver, and diamonds are returning. So, again, we've been in this business a long, long time. I've been in the investment business for over 35 years. I've been through these markets before. I've seen similar situations. Again, this is on a much grandiose level, but the fact is the statistics are the same. And basically, I'm very enthused as to what I'm seeing in the market. Now, again, from time to time, you get these short positions in the market, mostly by J.P. Morgan and other banks that for some reason the Commodity Futures Trading Commission allows them to short the market to such a tremendous extent, but those are shorter-term situations. This year was a tough year. Gold and silver really, hung in there very well, but the fact is that I believe it's going to be next year that we're going to see this market take on a life of its own, and the gains that we didn't or we may not see by the end of this year, we will see next year. But again, I would not doubt that we could see $2,000 to $2,500 gold, and it could happen very, very quickly. Number one, you have shortages in gold. You have shortages in silver. There's a tremendous amount of investors that buy the physical metal, and that doesn't necessarily show up in contracts and that in the papers. But I got to say that I believe that we are going to see a massive shortage in the gold market and in the silver market that will propel prices to levels that most people never ever dreamed possible. And don't forget, the general public isn't even in the market at this point here. Imagine what's going to happen when the general public really starts to get involved, when they realize that by putting your money in the stock market, what's going to happen over the next 2 years to you. That's the last thing that I would personally do at this point, is have money sitting in paper assets like stocks and mutual funds, especially with the uncertainty of what's going to happen at the end of the year with the fiscal cliff situation. I don't have any confidence that they're going to be able to solve that situation. So again, the fiscal cliff situation is on everybody's lips. But then there's one other landmine that I think is even worse than that, and that's the derivative market. It's in the quadrillions of dollars. It's unregulated. Most investors don't even know how to utilize them, don't even know how they work. The fact is, it could absolutely destroy the market. So you don't want to be in the stock markets and mutual fund markets at these particular points when in a month from now, we could see the market drop 20 or 30%. Don't forget, most investors lost all their money in 1999 when the dot-com companies fell. Then you built it back up, and by 2008, you're almost at break even, and bam, the market drops from 14,000 down to 6,500, drops from 50%. Those that could stay in the market wait another 5 years to get till 2013 to get back to break even, and now the market's got a chance of falling again. It's not for the small investor, and it's not a good place to put your retirement funds.
And you take a look at what has been talked about on our show in the past, reported by 60 Minutes. You have these high-frequency traders now that are going in and out of the market, and they're causing flash crashes that can't be explained. It's just a very dicey time to be involved in the equity markets. 1-866-623-2002. Speak with Worldwide Precious Metals, the company Harold recommends you use. Start up your own precious metals investment account today. Gold, silver, platinum, palladium. They will educate you about the ins and outs of this hard asset market. You can manage your own precious metals investment account, trade the market if you want, buy or hold. They're there to help you maximize the profit, minimize the risk. And the key is they're the experts in this very specialized market. Stay away from, people that are not experts, that don't understand this market at all. Deal with somebody like a Worldwide that have been through the entire bull market, the full 10 years. The metal can be stored on your behalf, delivered to your door. You can take physical possession of your metal anytime you want. They'll go through all the ways that you can own this market. It's a liquid asset. You can buy and sell with a phone call, and it's a must in the times that we live in that you have an allocation of precious metals. When you have the money you do in your portfolio, you need to allocate some of it to hard assets: gold, silver, platinum, palladium. Speak with Worldwide, 1-866-623-2002, the website wwpmc.com. Get our newsletter. In our newsletter, Harold touched on it. George Soros buying gold heavily here in the third quarter. In fact, his Soros Fund Management, they increased their holdings by 49%. Brazil has boosted their gold reserves to the highest in more than 11 years. Of course, a lot of those Latin American countries are starting to struggle fighting inflation. Scotia Makata coming out this week and saying they would not be surprised at all to see gold prices at $2,200 an ounce in 2013. Also, and this is a bit of a surprise, Merrill Lynch, they're saying they expect a rally in gold to $2,000 an ounce, and they would not be surprised at all if that happened in 2013. And these are people that you're not normally hearing very bullish things about hard assets coming out and saying they see a major move in gold and silver in the new year. Also, two interviews that are must-read and see interviews in our newsletter. Greg Hunter interviewed Eric Sprott from Sprott Asset Management and also Nick Barashev. And Nick Barashev talks about hyperinflation and a complete collapse. And that's why you need to definitely protect yourself with hard assets. The interview with Eric Sprott, they talk about the central banks, that they're possibly not having the gold that they say they do. And that's something GATA, the Gold Antitrust Action Committee, has talked about for years. So get our newsletter, educate yourself, take advantage of what's happening in the world. Yes, it's not about being positive or negative. It's about being realistic in the times that we're in. It's hard assets. That's what's going to get you through. 1-866-623-2002, the website wwpmc.com. Come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 23rd, 2012. Our time is 9:09 Mountain, and that's 11:09 Eastern. Radio show runs AM 640 in Toronto, QR 77 Calgary, 630 Ched in Edmonton, and it is a huge weekend for those in Toronto and Calgary. Obviously a big party all week in Toronto because the Grey Cup there, 100th Grey Cup in Toronto. Ricky Ray and the Argonauts made it into the game, making it even more special. And then out of the East, we have a very good team, and comes out of the West. A lot of people thought BC might be there, but Calgary just played a phenomenal game on last Sunday and beat the BC Lions. I know my uncle who lives in Vancouver was very disappointed, but great to see Calgary and Toronto in the Grey Cup. Good luck to those two teams. To invest in precious metals, deal with a Canadian company that Harold recommends. They're out of Vancouver, Western Canada. Been in business over 10 years. The entire time this bull run is gone in hard assets. 1-866-623-2002, the number to connect with them. Their website, wwpmc.com. We have our free weekly newsletter. You can go through it in 5-10 minutes, be completely up to date. They'll be happy to send it to you via email free of charge every week. Harold's websites for diamonds: rarecoloreddiamonds.com. rarecoloreddiamonds.com. His other website, and we will have an auction at some point very soon, hsfineauctions.com, hsfineauctions.com. Go there, take a look around. You can connect with Harold via the phone, 1-800-432-1022, 1-800-432-1022. Should mention, if you ever miss a radio show, the shows are archived on hesradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes, which is absolutely free. All you need is iTunes on your computer or smartphone. Everything is free associated with that. We are portable. You can take our show anywhere. This week, our featured diamond, and it is absolutely gorgeous. Have a picture of it in the newsletter. Go to rarecoloreddiamonds.com. Click on the featured diamond. It will take you there. A 0.51 carat radiant cut, fancy, intense, purplish pink argyle. It is absolutely stunning. Harold did a seminar last week in Denver, and he was doing the show in Denver last week. He wrote an article for a magazine, and it's called Luxio Magazine. We have that article in our newsletter. You can read it. It's all about rare colored diamonds and why they are such a fantastic investment in the times that we live in. We also have a picture, and it's a must-see picture of the Siegel family. We have Harold with his wife, Harriet. And we were joking before we came back to our segment, Harriet does not age. She looks exactly the same. And also Harold's sons, Jonathan and Evan, in the picture. Harold, a great picture of the family, and you have the banner in the background, Siegel Fine Auctions, rarecoloreddiamonds.com. It was a successful event last week in Denver. And your wife, I don't know, not only does she look good with all the diamonds, but she just does not age.
Well, thank you very, very much. I'll make sure that I tell her that. But you're right. She looks beautiful. After 30 years of marriage, she still looks absolutely phenomenal. Very proud of my boys. My son Jonathan just lost 45 pounds. He looks phenomenal, and Evan just came on board with us. My son Evan worked for 15 years with Clear Channel, one of the biggest radio companies in the country, and after 15 years joined this family business, so we're extremely excited about that. He brings an awful lot to the table. The event in Denver was a tremendous success. We did extremely well. It was not a large seminar. It was for 100 of the wealthier families in Denver that are concerned about the same things that we are: inflation, deteriorating currencies, and that type of thing. And the seminar went extremely well. One area I was not overly excited about was the live streaming, because streaming has never been my favorite. It cuts out all the time, and it doesn't make for an enjoyable experience. However, with my friends up in Vancouver that built our auction site, we now have technology, and we can do live seminars, and we will be doing them in the foreseeable near future all over the world, and be able to do it from my office without streaming it. So I'm very, very excited about that. We had 4,000 people that signed up to watch our seminar. 4,000 people. So if you don't think that there's interest in colored diamonds around the world, that'll tell you the truth. 4,000 people signed up to watch the seminar, even though there was only 100 people at the seminar, which was full. So all in all, the world is becoming more aware of how severe the situations are in the financial world, and basically understanding that there are certain assets that do extremely well during times of, again, high inflation and currency devaluation, and that happens to be the diamond market. Not only the diamond market in general, but a very specific part of the market, which is the rare colored diamond market. Now, not all diamonds are investment quality diamonds. Just because a diamond is colored, it does not mean that you've made a great investment. In fact, only certain diamonds have the track records that are needed in order to be able to, number one, hedge against the oncoming inflation, and number two, to hedge against currency devaluation. And again, it's never, ever been more important than it is at this particular point to get the investments in your portfolio before the situations get worse than what they are. And there's absolutely no doubt what's going to happen in the diamond market. Now, yellow diamonds. We've been recommending yellow diamonds for decades now. However, there are thousands and thousands and tens of thousands of yellow diamonds that are not investment quality diamonds. A yellow diamond that's maybe an SI1 or an SI2 or a VS1 or a VS2 or even a VVS1 and a VVS2 does not do the job. What does the job is internally flawless. So you need to have a specific type of diamond in order to get that 25% increase that yellow flawless diamonds have given over the past 30 years. Back in 1980, you could have bought a 1-carat yellow flawless diamond for about $500. Now they're around $20,000 if you could even get one. There are other type of yellow diamonds. You've got to be very concerned because yellow diamonds come from South Africa, South America, and then they also come from India. Now, India has produced some amazing diamonds over the past. Some of the most beautiful blue and the odd pink diamond have come out of India. However, Indians' yellow diamonds are of very low quality. They're very brittle. They don't have that shine and luster or that fire that we call it. And basically, they're about half the price of a South African or even a South American yellow diamond. So if you look on our website and you look at our yellow flawless diamonds, the fancy yellows, the fancy intense, and the fancy vivid, these diamonds are of tremendous quality. On a scale from 1 to 10, these are 9s and 10s. Whereas if you look at the Indian diamonds, you can tell the difference just by looking at them. There could be 100 diamonds sitting on a table, and you'd be able to pick out the lesser quality diamonds. So be very, very careful. You don't buy diamonds based on price, and this is extremely important. Right now, diamonds are skyrocketing in price. They're not going down, so there's no deals on diamonds. You're not going to get a deal on a diamond. So if you're looking to buy something that's cheap, you're going to find that you're just not going to make your money going forward. The other situation is selling them. We're the only company that can resell your diamonds for you because we created the secondary market to resell them. Nobody else bothered to do that. How can an investment be an investment if you have no way of reselling it? So we built, and it took us 2 years to build H. Siegel Fine Auctions. It's the most sophisticated auction site of its time. What this site will do, no other site can do. And the reason that we built it is because, number one, our clients own diamonds and we needed a way to resell them. But number two, again, it's a way to make the world much more aware of the rare colored diamond market, and that's exactly what has happened. We now have clients all over the world. We had 4,000 people that signed up to see our seminar, and a major part of them were in Asia and in Europe. So that tells you how widespread the interest is and the fear, because what's happening in Europe is unprecedented. You've got countries going bankrupt and currencies being devalued, and these people are petrified. And where are they putting their money? In about the only safe asset that's non-volatile, which is the diamond market. So you have to be in the yellow flawless diamonds. And again, if you can't afford to be in this market and do it correctly, then this is a market that you want to take a pass on, because again, it's not for everybody. With our company, the minimum investment is $15,000. We carry diamonds starting at $15,000 and going all the way up to over $50 million. But most of our clients that invest in these diamonds invest $20,000, $30,000, $50,000, $100,000. You're not investing money that you need to live on a day-to-day basis, because a diamond investment is a longer-term investment. You want to put it away for 5, 10, 15, 20 years. The longer you put these diamonds away, the more and more they go up in price. This example I can give you, in 1950, a man by the name of Hancock bought a red diamond, one of the first red diamonds ever purchased. He purchased it for just over $50,000, I believe the number was. It was just slightly under a 1-carat red. He bought that in 1950. Mr. Hancock passed away in 1985. By 1986, his wife had sold that diamond at Christie's auction house for a whopping $927,000. $927,000. Now, again, it was a 30-year hold, but again, you went from 50 to 927,000, and now it's estimated that the Hancock Red is worth almost $3 to $4 million. So the longer you put these diamonds away, the more and more they go up in value. I bought these diamonds, yellow flawless diamonds, for my kids when they were growing up, and now that I have 3 grandchildren, they all own yellow flawless diamonds put away for their future. So again, when you look that my grandkids are in the under 10 years old, they put them away for 20 years. You're talking about giving your children an opportunity, to get started in this world, where if you took that same $20,000 and put it in the stock market, the chances are they're not going to even have $20,000 in that account in 5 to 10 years. So the bottom line is that you need an investment at this particular point that will hedge you against inflation and that will offset all the bad things that are coming up in the economy. And the fact is that the situations are so severe that we don't know how bad they are. The other thing about certain diamonds, that they have a negative correlation to the stock market. For example, in 2008, when the stock market plummeted by 50%, there are certain diamonds at that point that went up 50%. So basically, if you had $1 million stock portfolio and you had $1 million diamond, and the stock portfolio dropped by 50%, you lost $500,000 out of your $1 million in your stocks, and that happened in 2008. Meanwhile, there are certain diamonds that went up 50% in 2008, and if you had $1 million stock portfolio or diamond portfolio, and that diamond went up 50%, what you lost in stocks, you made back in diamonds. And that's what I'm talking about, offsetting the risks that are inherent in the markets. And again, when the stock market falls, there are certain diamonds that are going to skyrocket in price. The three major diamond classes that we recommend are, number one, the yellow flawless diamonds. The canary diamonds, which are the fancy light yellows, they're on our website. All you have to do is go to rarecoloreddiamonds.com. That's our website. Go to the loose diamond section and start looking at some of the most beautiful museum-quality diamonds you've ever seen. And we invested in technology to video our diamonds. You get a full view of every aspect of the diamond, and the GIA reports are there for the diamond. The GIA stands for the Gemological Institute of America. They're a nonprofit organization, and they grade the diamonds. So you never buy a diamond that doesn't have a grading report. So we carry fancy light yellows or canary diamonds, which are very, very popular. They're very soft and beautiful. Then we carry the fancy yellows, the fancy intense yellows, and the fancy vivid yellows, which are the best of the best. Those are the diamonds, again, the GIA grades as the best color that money can buy. But all of those diamonds move up by at least 25% a year. The vivids are starting to move up a little bit more than that, and you'll be able to see by our website how few vivid yellow flawless diamonds there are available. Again, they're extremely difficult diamonds to get. So you don't want to invest in yellow diamonds that are, number one, not internally flawless, and number two, you want to avoid the yellow diamonds from India because, again, they're of very poor quality and they just won't give you the return that you want from a diamond. Number two, the Argyle pinks. Probably the biggest return that you'll see in diamonds is with Argyle pink diamonds. They're moving up in price tremendously because the mine that produces them is about to close in the next 5 years. That means that 90 to 95% of the pink diamonds will be gone. There will be no more pink diamonds coming out of the Argyle mine, and there's no new mines that have been discovered in the last 15 years that produce any colored diamonds, let alone these magnificent pinks. These Argyle pinks are in the news almost every single week. We just had the Argyle tender, which was a tremendous success. The fact is that these diamonds all sold for record prices. But what the Argyle tender showed me is that the sizes of the diamonds are getting smaller and smaller, and the prices are going higher and higher. Last year, in 2011, the top diamond that came out of the Argyle mine was a round 2-carat fancy vivid purplish pink, and it sold for just over $2 million. This year, the top diamond was a 1.32 radian cut fancy vivid purplish pink called the Argyle Siren, and it sold for $2 million. So you can see that the size dropped substantially, but the price was the same as last year for a much more substantial diamond. So it tells me that the mine is, again, starting to produce less and less diamonds. We're going to have a supply and demand situation that will cause the prices of Argyle diamonds to go up 8 to 10 times what the prices are today. You know, the funny thing is last year you could have bought an Argyle pink diamond in the 20 to 30,000 range. Now it's extremely difficult to get a beautiful Argyle pink for 30 or 40,000. The prices are rising. It's one of the best investments that you could possibly make. And again, where can you invest your money nowadays that you can make any type of return? It's at risk when you put it in stocks and bonds. The commodity markets are extremely volatile, but a rare colored diamond that goes up 25%, doubles in 4 years, and has the potential, like an Argyle pink, to go up 800 to 1,000% in the next 6 to 7 years, you'll just never see another investment like that. And if you miss this move, by the way, this is something that will never be duplicated. Just like the move in gold and silver will not be duplicated, the move in diamonds is unprecedented and will never, ever happen again. Not to the extent that we can still buy diamonds for $20,000. It can be $100,000 in the next 5 to 10 years. You want to buy Argyle pink diamonds while they're still available, and you want to buy yellow, internally flawless diamonds, but the high-quality ones. You want to buy the South African and the South American ones, and you'll only see those on our website at rarecoloreddiamonds.com. Now, even though we're into the rare colored diamond market, because those are the diamonds that go up the most in value, there is one other diamond that we recommend very, very heavily, and they're extremely, extremely difficult to get. And they're not colored. In fact, they're colorless. It's a D color, which is a colorless white diamond, and these are flawless. So these are D flawless diamonds, the rarest white diamonds in the world. They represent 0.001% of the market. These are the diamonds that I brought up before that were negative correlated to the stock market that actually moved up 45 to 50% in 1 year. These diamonds are extremely rare, very, very difficult to get, and they're soon to be even more difficult to get because there's one diamond fund only in the world that's ever been approved. It's a good friend of mine out of Switzerland, and they're about to kick off this diamond fund, and all that they're buying is 1 to 5 carats, round, brilliant, D flawless diamonds. Once this fund buys out these diamonds, there will be hardly any available, and the prices can increase 40 to 50% a year. Now, if you compare a D flawless white to a normal white diamond, let's say a 1 carat regular white diamond that's round and brilliant, which is a very rare cut, but again, a beautiful cut, and let's say it's an H color and it's a VS1. Maybe a diamond like that would be about $10,000 compared to close to $80,000 to $100,000 for a D flawless white. So it's 8 to 10 times more expensive than your normal white diamond. By the way, in 1980, when all diamonds went up 500%, even white diamonds increased, but there were certain diamonds that just exploded in price and never, ever came back down, and those were the high-quality colored diamonds and these D flawless whites. Again, we carry red diamonds, which are the rarest diamonds in the world, but again, how many investors can invest $2.5 million a carat? I own 10 red diamonds, again, put away, but those are not where most of our business is. We also carry blue diamonds. Blue diamonds in 2005, a vivid blue diamond was $200,000. When the mine closed 3 years later, they were $1.4 million, 700% higher than they were 3 years before. And now a vivid blue diamond is worth close to $2 million a carat. I have some of those on my website. That was a result of no more blue diamonds being on the market. So if you learn from history, history repeats itself. The same thing that's happening with blues is now starting to happen with pinks. We've got a clear picture as to what's going to happen in the Argyle pink market. And again, I've invested extremely heavily into the Argyle pink market, the D flawless market, and the yellow flawless market. In fact, within the next few months, once they're all finished being cut and polished and graded at GIA, you will see the lion's share of Argyle pink diamonds on my website. We just invested 8 figures in Argyle pinks, and they're all going to be coming out in the first quarter of next year. So, again, it's one of the best markets you can invest in. It's non-volatile, so how can you make 25% on an investment in a year and no volatility to the market? It just doesn't happen in any of the markets, but in certain diamonds. So, again, we're very excited about what's happening right now. We're getting a strong rally in the gold and silver market. The oil market looks very strong to me. We should see a very strong move going into 2013. The yellow flawless, the Argyle pink, and the D flawless white market is just on fire. But again, my strongest recommendation, and this is extremely important, the fiscal cliff is coming due at the end of this year. It could drop stocks by 20, 30% or more. The bond market is in trouble. Bill Gross, the biggest trader in the world of bonds, is saying that the bond market looks horrible, and they're very concerned moving forward. The stock markets are risky. The commodity markets are volatile. Again, we've got currency devaluations. We've got war in the Middle East. We've got so many scenarios going on. The sovereign debt situation in Europe, where countries are going bankrupt and currencies are being devalued. And then you've got this very quiet market, this tiny little market called the rare colored diamond market. And we're the leaders in this market. I put a lot of work into this. Again, I'm very proud to say that most of the articles that are coming out about rare colored diamonds at this particular point are coming out because 7 or 8 years ago we came out with a report on diamonds. Rare colored diamonds, the best kept secret, created the secondary market so our clients could resell, and that has changed the diamond market as we know it. So again, we want your business. We'll work very hard for your business, and we're willing to sit back and wait and make our money when you make your money, because we make our money when you sell through H. Siegel Fine Auctions. If you bought a diamond, an Argyle pink, for $40,000 and sold it for $400,000 and made a $360,000 profit in 10 years from now, we get 10% of the profit and you get all the rest. That's why we built H. Siegel Fine Auctions, for our clients to be able to resell their high-end collectibles. We also, on that site, sell some of the most beautiful gold and silver coin pieces, rubies, emeralds, and sapphires from time to time, but this was built for our clients only to resell their diamonds that were purchased through my firm. So, again, we're extremely excited about the future. You know, we had planned on doing an auction in October when I got back from Colorado, but again, it's just been way too crazy with the seminar situations and everything. We want to do it correctly, and we've got some diamonds coming out for the new year that are just so ridiculously rare and have just been cut, like princess cut flawless yellows and diamonds like that we're going to hold our auction in January to start off the new year. It's going to be an extravaganza, and it's going to be played all over the world. So, again, we do this for our clients, the listeners to our radio show, and again, all we want is for us to get through these difficult times and prosper during a time when most, unfortunately, are not going to do the right thing. Go to rarecoloreddiamonds.com. Look at the loose diamond section. Look at our yellow flawlesses. Look at our Argyle pinks and our deep flawless whites. Take some of your money that are at risk in paper assets like stocks and do yourself a very strong favor and put yourself into a rare colored diamond and give yourself an opportunity to prosper when, again, the markets are taking away. So, again, I'm very excited. Gold, silver, colored diamonds, and deep flawless whites and oil is where we're going to make our money for the next 5 to 10 years.
RareColoredDiamonds.com is the website. Our featured diamond of the week, 0.51 carat radiant cut fancy intense purplish pink Argyle. Go to RareColoredDiamonds.com. Click on the featured diamond of the week. Also, you can get our weekly newsletter from Harold. We have a monthly newsletter about diamonds. Connect with Harold, RareColoredDiamonds.com. And I should mention as well, there is a telephone number if you'd like to speak personally and privately with him, 1-800-432-1022. Last week, we had a 76-carat Archduke Joseph diamond. It was a colorless diamond selling for $21.5 million. That was a record. We also had a blue diamond sell. In fact, that sold for $10.86 million. It was estimated to go for 3 to 4, sold to world-famous London luxury jeweler Lawrence Graff. So that blue diamond sold for a record price. If you would like to get the auction results from last week from Sotheby's and Christie's in Geneva, we have them. We can send them to you. We also have auction results for the full year. We can send those to you as well. So connect with Harold at RareColoredDiamonds.com, and the telephone number, if you'd like to speak with him, 1-800-432-1022. Harold, we have about 1 minute left. As we've said, it's actually been, even though it's been a very difficult year for hard assets, gold and silver and diamonds, it's actually been a good year.
Well, diamonds have done amazing. I'm very pleased with what's happened in the diamond market. As far as gold and silver, the year is not over. These markets can rally very, very strong, and if we break $1,800 gold, which I think we will do almost any day, the market's going to take off and run when most people least expect it. Again, I'm very, very bullish on gold and silver for reasons of high inflation, currency devaluation, and just overall uncertainty in the market. And again, the rare colored diamond market is speaking for itself. It's doing phenomenal. It's in the news almost every day. I couldn't be more excited about the recommendations that we've made to our clients and listeners.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day. And again, it should be a very exciting Grey Cup.
Yes, good luck, Toronto. Good luck, Calgary. 100th Grey Cup in Toronto. Toronto Argonauts, Calgary Stampeders. I think it's going to be a very, very close game. Connect with RareColoredDiamonds.com. Go to the website and call 1-800-432-1022 to invest in precious metals. The company Harold recommends you use worldwide precious metals, wwpmc.com. Telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.